Welcome back to the Bubbles Stock Market Show. We are still in the open of Monday, October 20th, 2025. Almost 1 hour in, 10:18 a.m. Eastern Standard Time. Almost 1 hour in. Brought to you by or because of my desire to help you gain financial independence without spending all week in front of a computer. For example, look at how much easier it is to get news like this. Allegedly, we're looking at 10 news channels here, live news. What I love about this is I'm able to quickly scan through here and read these headlines, and if I want to find out more information, I can click into it, and I don't have anything more to do. There's nothing to listen to. There's a good, easy way to filter it out without hearing too much or anything. So, what is going on in there? Nothing that I saw when I looked through there earlier, nothing that I felt I needed to be concerned with. I felt like, just like normally, the real action is happening right here. Here's where the real action starts, and then we're just playing the game into here. So let's look at the game. What do we got going on? So we got Palantir Gold, SMCI, Hood, ASTS, and Tesla. I usually keep these six on a 1 day, 1 hour chart because I am figuring out ways to day trade options on these, and it is quite enjoyable. So it is different though to look at a 1 day, 1 hour chart versus a daily chart. So let's switch over to daily chart for a moment. We're gonna pull up what I tend to look at, even though I'm working on a different layout for different parts of the bubble stock market show. S&P 500, we'll open these up and go through them relatively quickly. S&P 500 popped up today. We are still just like the Monday since this happened. We're still dealing with inside of this candle. We are, moving our way up towards the top of it, and I think overall that's somewhat to be expected because markets do tend to kind of gravitate up. We had been in an upward trend, and when we look at the MMRI, it's basically been going down. Although, like this big spike in the VIX, it's also, I think it's also possible that just during the Trump presidency, we can expect an elevation in the VIX. And then after these 4 years, we'll see what happens. Will the elevation stay, kind of go back? We'll see what happens. Maybe there'll be different eras of like VIX market era, and I think that already is that. Bitcoin via IBIT, we see like this 3 month range here at the bottom of it. So I think if you're going to play IBIT, there's a variety of ways you can play IBIT. One thing that's great about playing this, I don't really like the term playing so much, but I will use it playfully here. Uh, you can actually really play and have some fun with IBIT, in my opinion. And let's say that you do this in a way that all you're really betting on is that Bitcoin doesn't go away, right? If you're looking at it that way, if you're saying I'm going to get good at playing IBIT as an optionist and stock chartist, and I'm going to play the price action of Bitcoin via IBIT, and I'm going to do a lot of option strategies and any way I can make money with it. But I'm going to know the flow of IBIT so well that I can do anything. If it's going sideways, I know, and I'm doing sideways strategies. If it's going up, I know, and I'm doing up strategies. If it's going down, I know it's going that direction, and I'm doing delta strategies. Same thing with up. You're using the right type of strategy based on what's there to extract income out of the stock market. Okay, this one. Here's another one. Let's say this one option chain is not as good, but I'm currently debating this in my own mind because I have a small amount of shares. I don't mind saying publicly, a very small amount, and I'm going to build a. I so that is my position, a small position. I'm going to build up a bigger position, and and as I'm doing this, one of the things that I'm thinking about is it seems like BTCI is a kind of a gamble, I guess, a bet, a investment, whatever. I think it's more of a speculation that, for me personally, the way I'm viewing it, I'm speculating that two things are going to at least stay in existence: Bitcoin and Neo's funds. I think that's pretty fair. Like I look at Neo's funds and the success they had with QQQI and just overall what I see them what I've seen them do in this new marketplace and what kind of company they are, what's the what kind of company are they in relationship to other companies in the marketplace doing the similar thing, this new thing that's come about, and trying to really look at all different things that could possibly be looked at, and it seems like for me personally, maybe it feels like a risk, uh, feels risky, and it's probably not. Like Bitcoin's probably not going away, and not anytime soon, at least. And if the actual price of BTCI, I'm less concerned with that as I am the dividend that it brings in. So that's kind of how I'm looking at it. I feel a lot more comfortable with selling strangles on now than I do like building up a big position in BTCI. And it might be just lack of education for sure, because this is definitely way riskier than just buying and holding an asset. Short strangles is way riskier than buying and holding an asset. In fact, buying and holding an asset that pays you every month, a dividend producing asset, um, that it's like super reliable. This is it's more like running a business. This actual strategy that's happening week to week. It's giving me, and the benefit though is giving me a weekly paycheck, and it's kind of somewhat significant. I can dial in this more to make it more significant. Like it was in the past, it was providing me with enough profit to know that, wow, this is good. I should keep doing this. And then I looked at, should I add other ones, uh, and where I'm at now is that I've had, I would say, Alex, getting close to 6 months or more of um, selling options on this particular ticker now, and for me personally, I'm really enjoying it. And what part of what I'm enjoying and what I suggest is that you figure out one stock, and probably not this particular stock, but figure out for your account size and your skill set and your interest and your lifestyle and what's going to have you thinking about it really very organically, which stock. And it fits all the not just your mental interest, but also it fits the numbers of your brokerage account. And it can be a bit higher. Like maybe you need to practice paper trade with it and get really used to it, and that's how you start, getting used to it. So it can be a pretty big stock actually, as long as you realize that you use it for motivation to build your account up to that. And however it's going to be, like you got to get some practice in, and I think it's worth doing though. I think it's worth building the skill because that's the thing. It's a skill. It's not buy and hold. It's an actively. It's a trade that you're actively doing week to week. And when you're doing that, you can start forecasting how much money you can probably make on a monthly basis because you're looking at forecasting on weekly how much you normally make. And now is the reason why I'm leaving the stock up here, not because I think you should use this one, but I'm going to demonstrate how to do it over time. I'll be demonstrating how to do it on this one because that's what I'm using, but there's other ones that you can use. And it's more about learning how to do it. Like, for example, if I was starting fresh, I don't know if I would use now. Maybe I would use a different stock. This just happened to be the first one I started with, and I stuck with it. And now I've got so much familiarity with it, and it was sort of a good choice, relatively speaking, that it's okay for me. But would I re-choose this one for you if I knew you personally? Maybe not. I don't know. I don't know exactly what your situation is. So, but no matter what stock it is, stuff like this still is the same. Like this, it's probably not. This is pretty far out here compared to where it's at right now. This is kind of far out there. What amount of time? But it's not too far. So, in what amount of time is it going to be back testing this higher numbers over here? Because right now it's not getting past this. And if it's not getting past this, it's not getting past this. And if it doesn't get past this, it doesn't even challenge this. So yeah, and then that's the same is true on the bottom side, right? Those are short strangles. Okay, let's look at some other stuff. Crowd. This is another one that I'm learning to short strangle. In fact, I you can see I have an order open here because I'm looking to get into a strangle. This one I looked at as well, and oftentimes I trade both of these to try to get experience with this one. However, I've got a lot of maybe not a lot, but I've got a few short options on my active right now in my that I'm managing that I placed and I opened up when I was in Hawaii. So let's say probably in September or August. Yeah, so positions that I opened around August, September of this year that are basically cash secured positions. As those are coming up, and some of them are not cash secured positions, but they're still positions nonetheless. So as those are coming closer to being expiring, and the fact that I relocated my life from Hawaii to here and be in this situation where I can basically trade for a living. And however, it's at the moment, at the beginning of this process, I am able to do that. But if you really look at how much money I was grossing working for other people the last like 10 years of my life in Hawaii, that was significantly higher numbers working for other people than I'm starting off here trading for myself. And that's fine with me. That's fine with me. I'm really excited to be in this position. I feel really honored and happy to like make quote unquote technically make less money, but I'm making money in a way where I don't even have to leave my bedroom. It's fantastic. That's it. And it's really good for me at least. Now, I don't have children and I'm not married, and this wouldn't be as easy for me to do if I was in that situation because I would need the numbers to be higher. And, my numbers are what they are, so they're definitely able to support me and I can grow these numbers, which is a great thing. And that's what we're that's why the Bubble Stock Market Show is here to help you and I grow these things. So that was CrowdStrike, Coca-Cola. This Coca-Cola, let's pull up Coca-Cola. Coca-Cola is a stock that I think that for buy and hold, you can't go wrong with this, especially like around these prices. You can get a better price. I think 66 and lower is better than 68. I think you can wait a little bit, but Even if you buy around here, you're like, it's not. I can't fault you if you bought 100 shares today. I can't really fault you. I mean, it's there's all this shoulda, coulda, woulda, like sell a put option at 67, and you can do all this stuff. But you know what? Sometimes I found like I missed out on Energy Transfer because I was waiting to get right at $8, and then things changed, and I end up getting, end up buying 100 shares at like my cost average, my average cost of that stock ended up being a lot higher because I was like too nitpicky. And there's a range of stocks when we're dealing with this stuff. There's like a range, and Noah Davidson refers to it as a zip code, right? So there you see this like this lowest number here to even kind of up in this area. That's like a range, and so we're not too far out of that range, right? We're still in this range right here. We're still under here. We're challenging this range right here, right? It's moving up here. So I think this would have been if I wanted to get some Coca-Cola right now. I think or if I wanted to right now, which I do, to be honest with you, unfortunately I have to admit that I don't have unlimited amount of money. So unfortunately, there's a lot of stocks that I would like to buy. I would like to have, let's say, probably like 10,000 shares of Coca-Cola, 10,000 shares of Mo, 10,000 shares of FCX, and I mean, heck, if the money is just coming out of nowhere, uh, 10,000 shares of ExxonMobil. Can I double up on these shares, or what can I do with this free money? Yeah, I would love to just to have all the stuff. And that is the thing that hopefully the bubble stock market show is going to help people like you and I, hopefully help people like me, and hopefully people like you with is that we have these constraints, these realistic constraints in life, financial constraints that we're working with playing this game here. But we're all able to play this game. And what's so wonderful about it, for example, FCX, right? If we're just talking about money, hey, you don't need a big amount of money to play the game here with FCX, right? It's around $40 right now. It's around 42. You could have got in somewhere like mid mid 30s to high 30s and got a really good entry price because unfortunately a bad accident happened with a company that's not going away, and unfortunately it has accidents in these industries. In this industry it has these type of accidents. So you know what that means? That means you put that on your radar as an investor, as a trader. You put that on your radar and you realize, oh, FCX, it's a mining company. Is mining going to go away? No. Is mining safe? No. Do problems and accidents happen in mining? Yes. When those accidents happen, does it drop the stock price? Yes. Is the company going to go bankrupt? Is mining going to stop? Are people going to stop using copper because of that? No. It's happened before. It's unfortunate, and that's it. So and then from there you buy, and it's an opportunity to buy at a good price because life's moving on anyways, right? It's happened before. People will die again in mining, and it's unfortunate. And sooner or later, you know what? I'm gonna die too. So it's just unfortunate, but that's something I'm confronted with. You might not be. I am. I'm wondering if this can do like a cup and handle thing here. It could. I don't know. It could. I'm not the cup and handle master. I really try to learn from them though, and I don't know. I think I would like to have other people's take on it. How much of a cup and handle they think that might be. And that was this is one that I said earlier today to be watching, and on a short time frame, it made a big movement in this day so far. So let's see if if someone were to bought this where it opened here at this line. So let's see if you were to bought it around the open around 55, and the high was 54, 54.60. So let's do this. Let me just pull up my calculator on my phone while I can keep that cursor on the candle and go through this really quick math. So it got a high of 56. 60 and it opened at 55.04. So that was a dollar 56 price movement. And the reason why that is important to look at is because let's go to that was S wherever it was here. Let's look at it on the hourly. So here it is. This morning we noticed it was pushing up, and then here's in that time frame. So as as making really quick scalp day trades with options, I'm watching these stocks thinking I saw it moving up pre-market here, but the option market's not open yet. So one thing I haven't tested, but in theory, if these trade 24/7, maybe something could be purchased in here. Maybe after hours you can make a purchase. And is looking I like the idea of one share and an actual it's doable as a one share gang. People that for whatever reason, low funds or really just want to start out and fine tune it and you have a lot of funds and you want to master the ability to read into one share because if you do that, what you can do with a lot of money when you have much more funds or even just with a little bit of money and make things grow faster is strategically use buying options on stocks that are in a month. Let's not just say a month like it's going to be rotated, but a let's say a quarter or a year or 6 months, some kind of extended time period. They're going to be going up. So we're trying to find stocks like that are in a run to the upside, like gold. You might say, well, it looks like it's going down the sideways now. Yeah, that's in hours. On the monthly chart, it doesn't look like that. On the weekly chart, it doesn't look like that. It's strong uptrend. On the daily chart, it doesn't look like that. Strong uptrend. So these are stocks that can go move well to the upside right now. And sometimes they're going to get switched out due to whatever. Something is a better mover, more predictable, whatever the case may be. But Hood, has a tendency to go to the upside. And and we were checking out this right here. We can bring it to a conclusion by just going back to understanding any of these six. And this one was I this morning because of what I saw going on here with gold, I was said let's look for gold and SMCI. Look for it for what? Now what I'm looking for is just how much of a movement was in here. So um, these are the pre-market indications that were given, and so now we're 1 hour after the market. There was a movement of about $1.56 in SMCI today. And the reason why I'm doing that is getting back to this. This part you might not really realize, but I really, really realize. Since there was let's just say $1.50 move in that stock, and you can think about option trades in you can think about option trading in one aspect or one facet of option trading that you can think about is delta on a dollar move. So, for example, what I mean by that is what delta could we buy a call option on this ticker symbol? What what delta could we buy that's going to give us a decent profit with about $1 move in the stock because we see that it moved just today in about an hour. It there was a time where it had a movement of $1.56 in a specific direction. The direction this time happens to be up, and so could we, if we were able to execute a trade earlier today, what option would we buy in order to get a let's say we're looking for 25 to 50 bucks. Would For me personally, I know that if I can make 25 to 50 bucks every day, it's not the only thing, but that's something that I can count on. 25 to 50 bucks. Now, let's not say every day, but let's say 25 to 50 bucks plus 50. So we're looking at so we're looking at an average of 37.50. And let's say if we can do that three times a week. So you're looking at 100 about $112 a week, about 450 a month. I think weekly is a good way to look at it though, because it's a little bit easier to manage than if you're managing week to week. You might be able to get more than 450 sometimes and control the downside better. So uh, it if you can, what happens is you get that established. You figure out your little something that's consistently working. If you can get it to work 3 times a week and it's giving you 25 to 50 bucks, and you can get that 3 times a week on one contract. This is the thing. That's why you're doing one share, one contract. A one share gang is going to be you getting it on one contract because you know you can scale. You're not only testing your theory, but you're also testing your skill and you're building your skill. And so you're getting comfortable with taking a little more risk, but you get comfortable to take more risk by starting with as kind of like as low as risk as possible. And there's no number lower than one that you can play this game with. So whether it's one share or one stock, that's you start there. And this is a good example of what you could do. Now there's a quite a bit more to it when you're using the option contract, but the reason why that it's um, worth discussing is because that one dollar movement and the delta aspect of it. So if we, it moved $1.56, right? It's still obviously moving, but from its open to this high point here. So does that mean that you would catch the whole thing? No, you don't want to look at it that way. You're not trying to catch the whole thing. You're looking for a big. You're looking for the bigger the movement, the easier it is to catch out of it, right? So this really isn't that big of a movement, but that's why options are so beautiful, and using options on the right stocks can be so beautiful. And so there's $1.56 that it moved. Okay, thank goodness. Now here's where it'll get. There's a lot more choices that start becoming involved, and it can become pretty nuanced. So this is the option chain for that particular stock. Now I had mentioned, it moved $1.56. So are we? What we're doing is we're saying, okay, it moved $1.56. So would it be unreasonable for me to assume that I can catch a dollar out of that? Yes or no? No, it's either for each individual person, it's either unreasonable or reasonable based on your skill level, and to catch a dollar out of it. Okay. Well, what about 50 cents? Would it be unreasonable to catch 50 cents out of it? A 50-cent move. And and then there's probably something in the middle. Would it be unreasonable to catch 75 cents? I mean, there's all these things, but we're going to find some number. And just to make math easy, because the delta it works easiest in a dollar increment, let's look at $1. And then if it's easy, let's look at 50 cents or some smaller portion of a dollar. The other thing though that is really debatable, and there's these different choices here, is what time frame, what day's the expiration. In this case, like you're buying something, so your theta, the element of theta, is working against you, and so it's sort of like, generally speaking, the safest bet to go is do it at like around 3 months. If you do it around 3 months, then you have a little more time on your side. When you're doing a very short term option, the theta is working against you faster, and that may or may not make sense to you. I'm not sure, but here's a way you can do it, whether if that makes sense or not. A way that you can think about it and proactively choose what dates you want to use, and like know the benefits and disadvantages to the riskier one. So the less risky one is around 3 months. When you're buying an option, and you if you have the money, just do it around 3 months, because that's the less risky option. You're buying more time in this a valuable thing here, because that's all we're doing is buying and selling time. And since you're going quote unquote long time, since you're not selling time, since you're buying it to counteract its negative work against the option premium, you can buy a little more because you have these other factors, delta in this, and we're really going on delta here. We're trying to catch deltas, right? A dollar move, one delta. So, but let's say you wanted that you didn't have a lot of money, because there's times when I don't have a lot of money. And in my opinion, I still don't really have a lot of money. I'm trying to get more, right? So trying to be conservative sometimes, and I'm looking at, I have to get out of this trade by the end of the day, regardless of the outcome. So it's just like a 1 day trade. So I'm gonna, if I do that, if I impose that on myself, which I'm not saying that I'm gonna keep doing going forward. I'm saying I've done that in the past. This is one thing that I've done, and it's a lot riskier. So I'll like buy. In the past, I tried an 18 day or around 18 day, or at least 14, because this one, it was just deteriorating too fast, right? I tried day trading these, and I did day trade these, and after a short amount of time, after like 1 day or 2 days or however long of testing it out, it was too short. Theta was working against me too much. And then I tried this one to keep the cost lower, because I was thinking, I just want to make $10. I want to make $20. I just want to make a quick in and out trade, just to start confirming to myself that I know what I'm doing. And then what I was finding is I was right in the direction. I was thinking, whatever, like, hey, I think this stock is going to hit this price in a certain amount of time. Like in 1 day, I think it's going to hit this price. And let's say it hits my price target. But what I found out is that because of because of the because of the theta working against me in this type of thing, that even because it was such a short contract, that even in like 1 day, it made that much of a difference where my limit order didn't get hit, because I'm trying to guess what is the option premium going to be when a stock hits a certain price. And I was right about the stock hitting the price, the delta part, but the other elements of the option pricing, I wasn't right. So I missed, even though my price target was hit, my option premium was missed by like 10 cents, $10 or something like that, and it didn't close, and it caused more stress than was needed in that trade. So I think around I think you got to play with it and see what you're comfortable with, and do the more you can paper trade these, because I think these aren't anything really tricky. Like you could paper trade these and get, I think, realistic results. And I think that's just a way better way to do it than risking real money. Even if you have a lot of money, if you have a lot of money, like, it doesn't matter how much money you have for bubble stock market show. What matters is your whole trading explanation. If I look at your brokerage account and you're explaining things to me in your life and things make sense, okay, that's good. But just someone that's so it's really based kind of on the numbers, and are the numbers practical for your living situation. if you're a single dad raising 25 kids and you're working 3 to 7 jobs to get it all done, and you're not wasting money, you're not drinking, you're not doing bad stuff like that, then man, like I wouldn't expect the same sort of financial sink or swim results out of you than someone that was inherited $1 million and has a lot of time to look at the market and is not married and doesn't have kids. So, there's all these different situations out there. And so buying a little more time, um, or buying like the right amount of time, just realize that it's probably better to buy too much time versus too little, because it is an uphill battle. When you are buying options, you are in an uphill battle. And that's what's great about selling options, is that you're in a downhill battle. So let's look at 18 days. All right. So hopefully I gave a good enough reason. So I'm not going to get uh, not going to pull people's make people go frantic over recommending this. I'm sorry, these aren't recommendations, but in this example, using 18 day. This is something I would do. I'm doing this. I look, it's only $500. It's okay. It's a little bit less than 500, but it's not 1,500. I mean, geez, oh Pete, let's look at the 18, 18 days. Let's look at 88 days. That's just kind of as close as we can get to 90. And what is that? Okay, so it's not that much more. All right, you can pay. It's not that much more for 500 ish. And here we are around 800 ish. So you pay about $300 more, and you're you got that. So let's say over here, here's the delta, right? 57, a 57 delta. So that means, let's say if these happen to be the prices, which trust me, they weren't. Like this morning though, and we're not going to figure out like what's the right number. Let's just take a theoretical look at, if you bought one of these call contracts, and you bought a call contract with a 57 delta, and you caught a $1 move in that, then the this number would change by 57 bucks roughly. So how long would that take? Well, how long would it take to, catch to for that to happen, this $1 move? Well, it depends on the stock, right? But the more the stock moves in a day, if the stock moves like an average of 12 bucks a day, then obviously it's easier to catch $2 out of 12 than it is to catch $1 out of $1.50, right? So there's ways to, strategically set it up like that. But this one, this one is sometimes it runs pretty good, and I think honestly someone could have done this. I couldn't do this morning. I'm developing the skill, but I wouldn't say I have the skill down pat. I'm much, much better at at short strangles. So at the moment, I'm looking to put a position on now, and sometime today, right? It ran up here earlier. I was watching the option premium of what it had. Like at the strike prices, I'm looking to buy and sell it. As I mentioned earlier I believe I mentioned earlier on the show, open show today, that I think there's more. I think the better. I think the good trading right now is shorting to the upside. So I think as far as being an option seller, that's where I am putting more effort. I'm putting effort in selling call options right now. A lot of naked call options. That's not what I recommend people to definitely start with. And just like someone that rides a motorcycle, they probably wouldn't recommend that you start on the motorcycle that they're using themselves after 25 years of riding motorcycles, right? They probably recommend something different. But there's this step process in getting there. Does it mean that you can never ride that motorcycle? No, it doesn't mean that. It just means sometimes there's this process of getting there and realizing where you're at on the process and picking the right stuff for yourself. So let's look at the overall, market and look to see if it's sort of weak to the upside. Does that mean it's not going to go up more? No, I think it might go up more, but I think it's going to go up slower than it's going to than it will go down if it goes down or when it goes down. See this big drop? I think that's what it is. It's like slow to the upside, fast to the downside. So I feel a little safer selling on the call side at the moment. But here, okay, so here we are. We're Q's representing the Nasdaq, basically back up to the that drop. Was it like whatever Friday ago? S&P 500 is doing the same thing, but not as it still has more to go to be kind of to the top. Dow Jones, same thing, and uh, Russell, same thing. That one's kind of lagging the most. Communications, looking to kind of still be in an upward trend. It's just short term moving average that we're seeing these moving averages kind of converging. What's going to happen? But I wouldn't be surprised if the overall markets stay bullish, if this is going to end up testing up here again. If everything stays bullish, that this will probably um, come into action. Uh, it's definitely dealing with this resistance here, but I think it could easily break through that. And I think a lot of it will depend on what's going on with the market, but this is probably one of them that's gonna, if things take off, that one will probably be up there testing quite a bit up there. And then the XLK technology stuff, it is kind of getting close back to that top again, and it looks like it's going to be testing all-time highs again, assuming everything stays kind of relative to the way it's going now. XLF, trying to recover, but you see that looks kind of top heavy-ish. It looks kind of it's like if you're like running up a hill, it's been running. Look at this. Oh, it ran. Oh, I had to take a rest. Like ran some more. Now we're kind of, this is the first area here where you notice in this run here, this one was still a little higher. Like here, this is a little bit higher. It's not that much higher, but it's like noticeable. It's noticeable. And same thing here, but not this one. This is the first one where it's taking this breather and it's lower, right? So it and then but it keeps going, right? It goes and it doesn't retest that, and now it's sort of getting, it's definitely in this area again where it's retesting that, and now we have these turning over of moving averages. So it doesn't mean it can't go back up, but it means that right now it's looking more to the downside a little bit. I mean, at least it's looking weak to the upside. So that's why again I'm thinking shorting call premium. And the transits are coming back up into this area right in here. I'm watching this not because I really exactly feel like I know a lot about the transits right now, but I'm attempting to learn, so I have them on here and watching. Energy is kind of in this. We see sticking around its 200-day moving average, which is sort of sidewaysing out here, maybe around mid 80s, we could say. Real estate in the stock market, and it looks like, if I felt like it, or if it were like a class, maybe we could look at iron condors on this. Iron condors, and then maybe short strangles, because it's basically moving sideways at the moment. And then we got SMH, which is looking strong, man, looking strong. It's probably looking the most bullish out of anything that I remember looking at today. Hit a new all-time high today. Look at that. Fantismo. So, I don't know. Let's see. I don't think we're not crashing right at this moment, at least. I'm looking at SPY on a different computer, looking at the VIX right below it. Everything looking pretty strong. We'll look at that next and maybe I'll take a break from talking and drink some water. But here, okay, so we got the XLP and it got a little volatile in this range, but it seems like it's still going to be range bound. And then the VIX been coming down. You know, I really starting to value the long VIX option trade. Volatility of the VIX really coming down. I would like to see the VIX get somewhere around 16 to 15 again, and I want to put some trades on during that time frame, during that volatility range. And XLY, which discretionary, it's I can't say that it looks sideways. It doesn't look sideways. It's got a little bit of sideways momentum going on right through here, but it's kind of see how flat here, sort of like kind of like that here, and a lot of times this might pop to the top. It probably will. A little bit of sideways here, but overall from here to here, it's been a pretty strong run, and it could continue. It doesn't. It definitely could kind of start going sideways, but yeah, it doesn't. Still up at the moment until it continues to go sideways and turn sideways. XLV healthcare. It is. We need more time to look at versus 1 year. Look at this. In 1 year, though, we kind of maybe bottoming out. XLU utilities been pretty good upward trend, pulling back to that 9-day exponential moving average, and then materials kind of getting range bound here. I think that's what I'm seeing. All right, that was the full looking at everything, and that's it. See range bound to some stuff is still nothing's like screaming down. A lot of range bound sideways to up, but maybe slowing down momentum. And who knows? At any time, I guess the bottom could drop out. But as far as the MMRI type of stuff, and which I think is closer, I don't want to say closer related, but I don't know what else to say. I think the MMRI and Mike Norman MMT economics. I think there's something similar. I can't really put my finger on it or express it eloquently at the moment, but I think there's something there that that the way that I'm learning from these two items are it's coming together that way. Let's look at here before as we're closing this out. So here's the S&P 500, and I like it. I like to look at all the stuff like this, and I like looking at this size, not of everything, but I think because I've been doing this for so many months, having this in the corner on this other computer, I'm look at this. It's still an uptrend. It's still uptrending. It's not as strong as it was before, but it's still in this uptrend. It might come to an end. All trends come to an end, and then when it comes to an end, I there's only three ways it could go. If it comes to an end, we got one of three out of that picture, and then the only question would be sideways or down. And it could go sideways for a short amount of time, like in the big picture of 200 years. A week is pretty short. So the stock market is a big picture thing. It's going to outlive me. It's going to outlive you. Already has outlived my relatives, some of yours. And so in the big picture, like it might go if we are paying attention to it every day, I think that we will notice things before other people. Now, sometimes that might mean that you're noticing it hours before other people, and then how many other people? Like we probably won't be the very first ones because we're not as inside of the market as other people are. However, like I know I would notice stuff in the stock market well before a lot of people that I'm acquainted with would know different movements, and that's the beauty of playing this game, being informed. Let's take a look at okay, so and we see up and overall down, but it's volatile, right? I remember this class with Honolulu option traders when I was in Hawaii, the beginning of this year. I remember saying, laughing because there's a guy in there that doesn't like Trump at all, and I remember laughing, saying that that I think the Trump presidency is going to make volatility great again, and sure enough, that's what's going on, making volatility great again. And so, anything in the news that is going to nothing, man, nothing, nothing seems super alarming of what I'm seeing in here. Nothing that I'm seeing. I'm not the greatest news snoop, and what I'm seeing in on the news at the moment, what I'm seeing in these markets here, we had governments shut down, but the markets are still going up, and it on the TV, I hear the news going on the TV, and they keep talking about the government shutdown, but it's not. I don't see any effect over here. Things are still pretty good. At least if good is up. I talked about that earlier, of putting this emotional judgment or connection on the stock market stuff, and look at how easily we do that. All right, so I gotta get back to doing whatever I was doing, and I will talk to you folks later.